Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Hope everybody had a fantastic weekend, and back to the markets we go. However, today was a little bit sleepy. Not a lot of volatility in the markets, a little bit of drift this way and that way. And really, the markets are wanting to get their footing because we have some more information that's going to be released this week. First up, tomorrow, 8:30, we've got housing starts and building permits. Wednesday, 2 o'clock, we got the Fed minutes from the FOMC most recently. And then Thursday, we've got existing home sales at 10 o'clock, followed it up by the most important Friday at 10 o'clock. We've got Fed Chair Jerome Powell giving his speech from the annual symposium. Plus, we've got earnings, Home Depot, Lowe's, Walmart, Target, all going to be hitting the markets this week. That should bring some volatility, but so far it was a slow start. So let's jump into the market summary and see where everything is panning out today. Today, we see the Dow Jones up 0.3%, NASDAQ basically flat on the day, S&P 500 up 0.14%, U.S. oil falling down 0.8%, gold basically flat, down about 0.08%, and Bitcoin down 0.9% after reaching new highs this last week. We're going to look at that chart in more detail here in a little bit, but until then, let's take a look at the S&P 500 heat map. And as we see here on this board, we've got a mixed bag of really stocks moving up and moving lower, but really nothing moving tremendously today as far as the big heavy hitters. We do have Meta, though, down about 2.21%. That was down over 3% earlier today and has since bounced back to recover, ending the day about down 2%. Microsoft down 0.7%, Google down 0.27%, and really not much to report on any other of these S&P 500 stocks. Bank of America there is up 2.23%, Wells Fargo up 0.63%. So let's jump into the S&P 500 and really see what's going on here. Last week, we were visiting this chart and looking at the difference of parallels and really how price is now stuck in between these two parallel channels. Today, we had price action really trading for the most part of the day underneath that parallel. And you see here in the last final 10-minute candle, we're starting to poke back above. So if I pull back further on the S&P 500 10-minute chart, you can see here we've developed this trend that has really held price down ever since we broke out of the parallel channel at the bottom of the screen. So we'll have to kick the can into tomorrow. But notice when price got down underneath this top end of the parallel today, we tried to fight and get up. We weren't able to do so up until the very end part of the day. We've got 1 minute and 56 seconds left as of now. We'll see if price action, and it looks like it's coming back in to close within this parallel channel. Now let's do some broader analysis on this chart because I was doing research this weekend. I wanted to bring it to your attention so that you can anticipate potentially what's going on here. Now I've got the weekly chart displayed here on the SPX. All right. So let's go into the bigger screen so you can see what I've done. Down here at the bottom of the screen, you see the RSI. The RSI, I've drawn a trend line from pivot to pivot. And if you go back through history, every time we've had in the most recent history pokes above the 70 and then retreated and then another attempt to poke above, we've created this declining trend line where that trend line has usually been tagged. There were a couple occasions it wasn't, but let's just go back through history to see how that all worked. And you see here's the COVID decline. And before the COVID decline, we had a massive peak up here on the RSI. The COVID decline right before it created the next peak, but then you notice too, when then price action came back up and then poked above again before RSI getting rejected and having selling pressure really hit the charts. And if you notice here, just on this short-term example, where are we currently? We can see here we are in the RSI. We're roughly right about here. So again, I've been saying for a while, we're due for some sort of 10% correction, 5 to 10%. That would just be normal in the markets. And you see right here after COVID, that's exactly what we got. We got a 10%, roughly 9 to 10% correction. And then the markets continued moving higher, creating that next pivot there on the chart. So if I continue to go back, you see here back in 2013 through 2014, the same thing happened. Poked above, then we created a pivot, poked above there too, and then price finally poked above before retreating on the RSI. Now price stabilized and then eventually came down, but at least for the RSI, giving us insight as to the price being extended or not. So if I scroll back even further, you can see right before the dot-com bubble burst, we had a very similar occurrence where we had price butting up above the 70 on the weekly time frame up to 3 times before price ended up retreating on the RSI. Then we all know what happened after the dot-com bubble burst. And if you go back even further, back to the 87 crash, you can see here too that we did poke up twice before that 87 crash. Then the crash occurred before that RSI price got up there to tag that trend line again. Eventually it was tagged, but it had a 30% correction before it hit the third time. So fast forward to where we're at now, and we haven't hit yet the third time. We're due for some sort of 10% just simple technical correction. Will it be a bigger one? I'm not sure, but this S&P 500 RSI weekly index is now showing me we actually do have the potential to go up a little bit higher to tag that trend line. Whether that's now or in a few weeks from now is the big question, but it's on the charts. It's written in the past history of patterns. We should likely go up, tag that trend line before price and the relative strength ends up settling out. All right. Next up, the Qs. The Qs, as you see here, we did a great job last week getting above this inclining trend line and have since now retreated back down. We even got support on Friday right here on this trend line, but today we see we gapped down underneath that trend line, made attempts to get back above it, and have since now failed. So we'll have to kick the can into tomorrow. Will price action then confirm underneath this trend line? We'll see. That would mean that we're likely coming down to the next support, which isn't far away at 567.79. Next up, the SMH. Now, the SMH did a great job at the very end of the day, pushing back up into this parallel channel. If you look on the 10-minute chart, and guys, these lines, this is all technical analysis, but it's amazing when you see how precise they are. Because considering, look back here. Look, if I scroll back on the chart, this parallel started back in August of 2024. But if we zoom into the 10-minute chart for today, you can see price over, and also Friday, price tried to get back into this parallel, keeps getting rejected, keeps getting rejected, keeps getting rejected. And notice this parallel is an inclining trend line. So it's not like I just drew a random horizontal line on the chart. This is displaying what price is fighting at this current moment. Now, post-market, we're now retreating back down on the SMH, but ultimately watching this parallel is going to guide us into future price action. I know we've gone up and below it many times, but this area still remains to be resistance, as I just displayed there on that 10-minute chart. Next up, the IWM. The IWM today did push a little bit higher, up 0.37%, but this decline and drop is now forming a small near-term and immature bear flag on the charts. What you want to see if you're an IWM bull is price to get back above this resistance at 229.30 and then continue consolidating right here in this manner, not towards the low end of what was a nice push up on the IWM. If IWM does start retreating, this area of support down here at 218.48, significant way away, will be support on the charts of IWM. Next up, Bitcoin. Look at this brand new all-time high on Thursday. Great poke above on Bitcoin, but look at the selling pressure that has commenced since. We've moved down, immature bear flag, moved down further today. Then guess what we did today? We retraced the scene of the crime of this breakout. Notice this declining trend line I was talking about over this last week. We broke out of it, and now since have done a complete retrace all the way down to the line today, catching support. You can see here, even on the 10-minute chart, we pierced this declining trend line ever so slightly, got a nice bounce, then even retested it again, and then continued on its merry way. Now, if you notice too, I drew this trend line on the 10-minute chart. This was near-term bullish momentum on Bitcoin, breaking out of this declining trend line, and it has not since retraced. So I'll be watching to see if price retraces to this trend line if we do get a bounce. I would have liked it to happen faster, much like after this break and sooner after the break. So in this instance, it would have been a move up and then a retrace down here for that continuation bounce. Now, if we do have a fall, this is ultimately bullish consolidation. We have a chance of actually breaking through there, because then this bullish consolidation would have failed. Biggest moves come from failed moves. That's why this line is in jeopardy, because it has not yet been tagged in this most recent trading day. Next up, gold. Not too much to report here on gold, except for gold is still forming a bear flag on the daily chart. We'll see if we have any more days of this consolidation. If so, that would imply a break of this inclining trend line. Albeit, though, this area and inclining trend line will be minor support. right at $3,300 on the chart. Next up, we've got silver. Silver here, basically the same as gold. Not too much has changed today, and really all in this pattern. There's not too much change. This is right in no man's land, right in between support and resistance on the chart up at 39.90. We'll see if we get any sort of direction tomorrow, whether we break down from this consolidation. But ultimately, silver still in a very good spot, has a chance to either go up or down. There's nothing that's saying one way or the other at this current state with the last few days of closing action. Next up, U.S. oil. U.S. oil did get a nice bounce again off of this declining trend line. You can see price action was even trading underneath it, but this trend line still managed to provide support. Notice, though, we've hit this trend line now twice in the most recent history. I still have a target for U.S. oil to come down here and tag this declining trend line right around $59 on the chart. Next up, nat gas. If you see here on Friday, we had a great move up on nat gas. We poked above Thursday at the close, and then Friday we pushed above, even tagged the next area of resistance, and then today really just chopped sideways, retested that declining trend line, and is still staying in this area. So ultimately, though, still on this red candle move down, that's all still bearish consolidation, telling me nat gas still has a good shot of going down to 255 on the chart. First thing needs to happen, though, price needs to get back underneath this declining trend line. We've moved back above and retested, so we're right there again, about 50-50 odds. Bearish consolidation should imply movement down, but now we move back up here with retesting the break of this declining trend line, gives it a chance to go higher. So right here at this current stage, it's a 50-50 shot whether nat gas goes up or goes down. Next up, the 10-year yield. The 10-year yield over the last several trading days has actually started pushing back up. I was a little, I was approaching and anticipating the 10-year yield starting to break down from this inclining parallel channel with this bearish consolidation. But the last 3 trading days, the 10-year yield has poked up nicely, pushing up higher into an area of resistance, which would be the top end of this red candle, currently at 4.41%. Next up, a big mover on the day, FSLR. Now, FSLR did have some good news hit them today. They have a new federal tax subsidy, and so investors obviously clamor to that and started piling back into FSLR. If this momentum continues, next resistance to watch here on the chart is going to be this inclining trend line from pivot to pivot, and then you'll see resistance right here, roughly around $230. If we don't get there tomorrow and we meander up into that area, the resistance will be 234.11. To the downside, if this momentum falters, the major support for it's going to be a pierce of $190 at 189.17 cents. Next up, Dayforce. Now, Dayforce also had some good news. They have been floated in the news of being acquired by Thoma Bravo. So whenever a company gets acquired by another company, the company getting acquired usually gets a massive surge in pricing. Now, we're still weeks away from finalizing this sort of acquisition. However, in the near term, if the talks still remain positive about this acquisition, watch this declining trend line for an area to take profits if you are already in Dayforce. Now, if I scroll back on the chart, you can see that was from a significant pivot back here in October of 2021. Now, if we get price to move up to that declining trend line, as I said, that would be a great spot to take profit. That's roughly just a pierce of $70 on Dayforce. Next up, we've got Meta. Meta here earlier in the day was about to break this consolidation. You can see this wick down here. Meta was down over 3% on the day. So I bring your attention to this inclining trend line on the chart that's only been hit twice. That means the next hit will likely generate some small bounce unless we're able to gap over it. All right. So be watching this inclining trend line. Very easy to draw from the April lows over to the pivot here that was created July 30th. Be watching price action when it comes down. And if it comes down into that trend line, should be roughly around 740, potentially even the pivot here from this June 30th trading date. Right there around 730 should receive a small bounce, but then watch for a breakdown. To the upside, this inclining parallel channel does not give Meta that much space to run. We're looking at resistance at 815 on the charts. Next up, Google. Now, Google, if you notice here, we really did struggle trying to get over this 50% area of this parallel. We've not even confirmed above here. We've just started consolidating in a diagonal inclining fashion. Those type of consolidations typically result in a sell-off. So the first area of support, now this could be a speed bump if we get a sharp sell in the markets, is this inclining trend line right around 198, basically a pierce of the $200 level, only $3.50 away. Another major level of support will be 190, followed by this inclining trend line right here, which is at roughly $185. But notice all-time highs at 207.05 is not far away. We could even have a bull trap where price pushes up above here intraday, but then closes back within the range of all of these other closed candles for the previous 5 closing days. We'll be watching this to really see what happens with Google if we do have another breakout, new all-time high, or if what's showing on this chart is showing that Google's starting to falter right here. Do we start declining here on Google? Next up, Tesla. Now, Tesla, as you see here, great break above this declining trend line. However, no confirmation. But we've got bullish consolidation. So Tesla right here too, along with the sleepy days, a lot of these charts showing us kind of mixed signals. We've got a bullish consolidation, but that's all consolidating right on top of this trend line. Consolidation right on top of a trend line typically implies price is about to break down underneath the consolidation area. So if that ends up being the case, this is the area of support I'd be watching for Tesla, this inclining trend line right at $300. Now, should this bullish consolidation play out, we'll be looking at 380, 376 on the chart. Next up, RCL. Now, RCL, this talk about bull traps right up here and potentially a bear trap right here. Very neat to see here on this chart, especially when you have the technical analysis with these trend lines guiding us on what to anticipate to happen for price action. So you can see here, we did breakout, then we failed on that breakout of RCL, and so much so that we poked down beneath this inclining trend line. Now, what happens when we break down from trend lines? We get a retrace. And that retrace has almost occurred. It basically kissed that area today. Tomorrow, it's going to be 333.61. These sort of patterns of breakdown and retrace are great shorting opportunities. So 330.61 with a potential first area of significant support down here at 277.51. That would be a nice steep drop, almost 20%, should we get a push up tomorrow to potentially have that shorting opportunity on RCL. Lastly, we've got Avalanche. Avalanche is an altcoin in the crypto space. And I wanted to bring this to your attention because you see here, Avalanche has really been very strong since putting in these lows down here around $15 in June. We pushed up all the way above 27, retraced down to this area, which has created this inclining trend line. But in the most near-term price action, you notice price has gone up at an angle. And then on the 10-minute chart, you can see here, price today did break down under that inclining trend line. So for the very near term, Avalanche may see some further downside selling action. First support is going to be on this inclining trend line right around $22.60, followed by $19.52. I think Avalanche, being beaten up as it is on the chart, has a lot of room to run once it gets over this inclining trend line. So if you're like me and running a hodler service or running a hodler portfolio of your own, buying coins as they sell down deep, be watching Avalanche right around a pierce of $20 to start accumulating more Avalanche for eventually a break higher and tagging this resistance area 35.26. Notice all that chop that occurred back here. There will be a lot of sellers in this general range. So be prepared for, if price to accelerate into that area, to be hitting that take profit button and growing that portfolio of your own. All right, guys, that wraps up today's Trading the Close. Don't forget to like and subscribe to the video. Thank you guys so much for watching. Look forward to bringing you guys some more good trading setups later in the week. Until then, I'll see you guys on the charts. Take care.